I'm going to give you the exact strategy that I use and millions of other traders use to find consistent profitability inside the marketplace, trading the Dow Jones 30. In this video, I'm not only going to give you this simple strategy that I use to make over $100,000, but give you the step-by-step trading plan and executions so you can do the same as well. Watch till the end of this video to really soak up all the information, as well as like and subscribe to support me further and help another trader just like you find my page and they can learn too. But before we get into the video, make sure you guys are following me on Instagram at Arkhamtrades. I post daily analysis, trade breakdowns, and I reply to all my DMs. If you guys want to learn more from me or have any questions, that's where you can reach me. The strategy we're going to be going over is the opening range breakout. The opening range breakout stands between 9:30 to 10 a.m. EST during the period in which the New York Stock Exchange opens. And typically during this time on the Dow Jones especially, there is a breakout that takes place either higher or lower in quick succession, and I'm going to teach you how you can capitalize on that breakout formation. First, we want to identify areas of support and resistance or liquidity pools inside the marketplace. These support or resistance levels can be fair value gaps, order blocks, or breaker blocks, either on the 15-minute, the 5-minute, or the 4-hour time frames. And liquidity pools can either be previous session highs and lows, Asia session highs and lows, daily highs and lows, and any old highs and lows inside the marketplace. Then as price comes down or up into either our support or resistance levels, anticipate this initial move as the marketplace opens to be the fake move, meaning immediately as we open up, at times price will create that fake move, tapping into these points of interest. So after identifying your points of interest, sit on your hands and wait for the marketplace to come to you. This initial push higher in this example is a fake push higher into this higher time frame level of resistance, followed by this liquidity pool. In this example lower, this fake move lower into that higher time frame level support or liquidity pool is the fake move as the marketplace opens. Then following tapping into your points of interest, you want to look for some type of rejection, either a rejection wick like a hammer or doji candlestick confirmation, or price stalling at that specific level. And then you want to see the marketplace reverse in quick succession. That's when you strike. So as you can see here, as the marketplace opens up at 9:30, we see this initial fake move into this higher time frame resistance level or liquidity pool. Following that, we want to look for some type of rejection. We obviously get that rejection in the opposing direction, and that's when we can then strike. And then as price goes into your favor, at least a 1-to-1 R, put your stop loss back at break even, and this is now a risk-free trade. Then you want to scale out 80% of your initial entry at a 2-to-1 R. Following that, you want to leave 10% running at a 3-to-1 R, and then leave your last 10% running for a 4-to-1 R. This is important as it leaves worry out the table, as this is now a risk-free trade. And on good days where price absolutely breaks higher or lower, you can capitalize on the whole move. And on days where you may just get a 2-to-1 or even a 3-to-1 R, you can still be content. Now let's get into the charts and show you guys this in action, as well as break down a trade that I took live with my mentorship students using this exact framework I taught you today. I'm going to break down a trade that I took live with my private mentorship students on June 24th, 2024 that netted us a little over a 3-to-1 R, which I could have made more on it, but I was content with what I got. We're looking at the 4-hour time frame here, and we can already identify this bullish fair value gap as a level of support, which we can see throughout the overnight session. We saw this push to the downside, tapping into that bullish fair value gap. Following tapping into that bullish fair value gap, we see this push to the upside. From the overnight session, we've established that low of day, tapping into that bullish fair value gap. So coming into the New York session, I already have that noted, right? Structure has been pushing higher. We created this bullish fair value gap. Price came down into it during the London session and Asia session. So coming into New York session, I'm anticipating a continuation, breaking back above these previous daily highs and potentially even higher, as potentially back up into this order block level on the 4-hour time frame. Let's go down to 1 hour to gain more context. We're on the 1 hour time frame here, and we can already identify this 1 hour bullish fair value gap, right? We can already identify this 1 hour bullish fair value gap as our area of support, to which we can anticipate coming into 9:30 opening, price coming down into this 1 hour fair value gap to potentially offer support for that continuation to the upside, back above these previous highs, as well as back up into this 4-hour bearish order block. Let's go down to a 15-minute time frame. We're down on the 15-minute time frame here, and we can see that we do have a nested fair value gap here. These two 15-minute fair value gaps these are nested PD arrays inside of this higher time frame PD array. We have this higher time frame 1 hour fair value gap here, which will actually mark out blue. And then we have these two green fair value gaps inside of it, which are nested PD arrays, meaning lower time frame fair value gaps inside of higher time frame fair value gaps. So these levels are obviously really strong support levels to potentially offer support coming into 9:30 opening for that breakout higher. Let's go down to a 5-minute time frame just before the New York session opens to see what happens. It's currently 9:25, 9:30 is about to open up. Let's see how it reacts as it taps into these support levels. What we want to see is that initial fake move down into these support levels, and then we want to see that quick rejection from it for that opening range breakout. Let's see what happens. We see that initial push lower here during the 9:30. And then we see this bullish engulfing candlestick, right? We saw that initial fake move lower, followed by this bullish engulfing candlestick. Well, as we can take note of this last down close candle here as potentially reclaimed order block here. Let's see if the marketplace can give one more retracement back down into this level. Let's give ourselves a 40-point stop loss just below this low. And a 1-to-1 target will be just about right here to where we can take our stop back at break even and potentially aim for even more. And let's see if we can get a 3-to-1 R on this trade idea. Price then comes lower back into that reclaimed order block here. Let's see if it leaves it. We see that push higher. We can put our stop back at break even. And then boom, we immediately see that push all the way back up here to that 3-to-1 R. This is the exact trade I actually took live with my private mentorship students that you can actually see on my Instagram, where I'm posting my trades, daily breakdowns on a day-by-day basis. So if you guys aren't following me on Instagram, make sure you guys are doing so. On to the next example. We're looking at our next example here for the Dow Jones. And first things first, I can take note of this bearish H4 fair value gap. So we have this bearish H4 fair value gap, which as you can see has not came back up into. We came close to it, but we have not traded back up into that level. So this is obviously a clear level of draw on liquidity that we can anticipate the marketplace to potentially come back up into before seeing that continuation to the downside. Let's go down to a 1 hour time frame to get more context. Now we're looking on the 1 hour time frame, and we can take note of these last two down close candles, which then creates our bullish order block. So we have this bullish order block here on the 1 hour time frame as a clear area of support inside of the marketplace, as well as we have a draw on liquidity, which is above us, this H4 bearish fair value gap, which has not been mitigated back up into, as well as we can also take note that we have taken out liquidity inside of the marketplace in the form of the previous daily lows. So we have a level of support, we've taken liquidity, as well as we do have a draw on liquidity, which is this bearish fair value gap, which we can anticipate the marketplace to come back up into. Let's go down to a 15-minute time frame and see if we can get some more information. Down on the 15-minute time frame, we can clearly identify that 1 hour bullish order block down here, as well as us taking out these prior daily lows. We can also take note of this area of liquidity above us, which is in the form of these London session highs. So we have previous session highs above us, as well as that 4 hour fair value gap as a drawn liquidity. So obviously we have a level of support below us after taking out liquidity. So we have a support level plus a liquidity pool. And then we do also have an area of targeting above us, which is this 4 hour bearish fair value gap. Let's go down to a 5-minute time frame because the New York session is just about to open up. Now we're down on the 5-minute time frame here, and let's see how the marketplace reacts after tapping into this level. We can see here that we got that initial push lower. It did give some type of rejection, but let's see if this rejection will hold. Followed by this bearish engulfing candlestick. Doesn't seem like this rejection is going to hold. I'm going to be a little bit more patient until I can get some type of clear confirmation that we're finding support here and price wants to leave it. Okay, we're getting somewhere here. We can obviously identify that we have this previous low. And then as we can see here, we're actually making higher highs inside the marketplace. We're making higher highs inside of the marketplace, as well as we just seen this bullish engulfing candlestick, leaving these last two down close candles as potential order blocks inside of the marketplace. So this is very good setup. So obviously I want to put my entry here as price comes back into this bullish order block. Stop loss just back below these lows, initially targeting a 1-to-1, to put my stop loss back at break even. And then we could actually aim all the way up here for at least a 4-to-1 R. Back up into that 4-hour bearish fair value gap, as well as taking out these Ace of session highs. Let's see how the marketplace reacts. Price comes down, taps us into our position. Right, price comes back up into our 1-to-1 target. We can put our stop loss back at break even. Alright, we're well over a 2-to-1 R, as well as we are approaching that 3-to-1 R target, just about so. So we've already taken out 90% of our position. Let's leave the last 10% remaining for that 4-to-1 R target. Alright, at this point, we'll just take the trade off here. We've already scaled out 90% of our position with that 3-to-1 R target. Unfortunately, price did not come higher back into that 4-to-1 R target, but we were still able to capitalize 3-to-1 R. On to the next example. For our next example here, we're going to break down another trade that we took live with my private mentorship students that netted us a little over a 4-to-1 R. So we're looking at the 1-hour time frame, and we can already identify this 1-hour bearish fair value gap as a level of resistance inside the marketplace to potentially see a fake move come up into that level for a potential rejection, as well as we can also identify areas of liquidity below us that the marketplace could potentially reach back down into after tapping into this level of resistance. Let's go down to a 15-minute time frame to get more context. Coming down to a 15-minute time frame here, we can identify this 830 high here, which was that news high, as well as we can already identify that 1-hour bearish fair value gap. So not only do we have a higher time frame level of resistance, but we also have a liquidity pool above us, which we could potentially see the marketplace reach up into, and then we want to see it offer resistance for an overall reversal back down into potentially this low and back into the low of day. Now we're down on the 5-minute time frame, and the 930 candlestick is just about to open up. We want to see if we could see an initial fake move to the upside back up into this resistance level to potentially catch the counter trend move back down below these lows. Let's see what happens. We see here we get that push to the upside, boom, tapping into that level of resistance. After tapping into that level of resistance, we get this long rejection wick, right? This looks like a doji candlestick, so this is obviously a rejection signature that the marketplace came up into this level, but obviously buyers could not hold, and we're starting to see sellers step in. So let's see if this rejection is going to hold by that rejection to the downside. As we can see here, we see massive bearish engulfing candlesticks pushing lower, creating this as an inversion fair value gap. Now I want to put the 50% of this inversion fair value gap as a potential area where I want to anticipate the marketplace to reach back up into. Stop loss just back above the inversion fair value gap high, targeting back below these lows here for a 4-to-1 R. But obviously we want to lock in our 1-to-1 R target, 1-to-1 R right here, and then we want to put our final take profit all the way back down here for a 4-to-1 R. Let's see what happens. Price comes back up, tags us in, and then we see the marketplace reach lower back down into our 1-to-1 R target, so we could put our stop loss back at break even. We're already at a 3-to-1 R, so we've already closed off 90% of our position. So let's leave the rest running for that 4-to-1. And just like so, that 4-to-1 R target is then met. And this is the exact trade that I took live with my mentorship students. So if you guys want to join me live every single morning, that's going to be a first link in the description. If you guys want to see more videos like this and want more trade breakdowns and even more content from me, make sure you guys hit that like, subscribe, and comment what you guys want to see next. I'm Arkham. Be safe.